All right, welcome back. Today, we're stepping inside the world of British pubs to really get under the hood of a massive rivalry between two giants of the industry, Punch Pubs and Marston's.
Now, this isn't your typical business case study. No. This is a real clash of philosophies. It's almost like a fable. You've got the aggressive, fast-moving, hungry wolf on one side, and the cautious, stable, steady retailer on the other. And for anyone who's ever dreamed of pouring pints in their own place, this is a huge question. The side you choose could change everything. Your stress levels, how much you earn, your whole life, really. So let's dive in and figure out what's really driving these two completely different machines.
Okay, to get why they act so differently, you've got to do one thing: follow the money. It all comes down to who owns them and what their big ultimate goal actually is.
And boom, here it is. This is the fundamental difference. Punch is owned by Fortress Investment Group. That's a giant private equity firm, and those guys are pretty much built for one thing: aggressive, rapid growth. Marston's, though, they're a publicly listed company, a PLC. That means they answer to shareholders on the stock market who, let's be honest, usually prefer slow, steady, predictable returns.
So because of who owns them, you get two totally opposite game plans. Punch is in what you could call full-on empire mode. They're buying up pubs left and right and throwing money at renovations. Meanwhile, Marston's is kind of playing defense. They're focused on chipping away at their debt and just polishing the gems they already have in their portfolio.
And this number right here, this just says it all. This is why Marston's is so cautious. They are sitting on a debt pile of around 885 times million pounds. I mean, when you owe that much money, you're going to be extremely careful about every single penny you spend.
So, okay, that's the view from 30,000 feet. But what does all this corporate strategy stuff actually mean for you? The person who might sign on the dotted line to run one of these pubs? Let's take a look.
Now, both of them have these turnover share models, which is pretty cool because it means you don't pay rent. But, and this is a big but, their focus is totally different. And that difference has a direct line to your bank account and what keeps you up at night.
Punch, for instance, is all about what the industry calls wet-led pubs. It's just a fancy way of saying that most of the money comes from drinks. In Punch's case, a whopping 77%. The massive upside here? It makes your whole operation so much simpler, especially when it comes to staffing.
And that brings us to what we could call the kitchen nightmare. This is a way bigger risk at a food-heavy Marston's pub. Think about it. If your chef calls in sick on a Friday night, your main source of income can literally just stop. Poof, gone for the night. But in a wet-led Punch pub, if a bartender doesn't show, you can just hop behind the bar yourself. That is a game-changing difference in how you run the business day to day.
All right, so the corporate strategies and the deals on paper make sense. But what's it actually like on the ground floor? What are the publicans who are in the thick of it saying? Let's look at the data.
And when you look at the satisfaction numbers, it's pretty eye-opening. There's a really clear gap. Marston's partners give them a super high satisfaction score, around 79%. Punch, on the other hand, is kind of stuck right in the middle of the pack, down at 61%.
So why are the Marston's folks so much happier? Well, it really boils down to two simple things. They see the company as fair and predictable. The word on the street is that they're reliable, especially when something breaks and you need them to pay for repairs. You pretty much know what you're going to get.
Okay, so what's the deal with Punch's lower score then? Well, it has everything to do with something we're calling the fortress factor, and it goes right back to their private equity owners. See, when you're owned by a private equity firm, your numbers are being watched like a hawk. We're talking daily monitoring. And if you start to miss your targets, that pressure from head office comes down on you way faster and way harder than it would at a traditional company. It just creates a much more intense, high-stakes kind of environment to work in.
So after you weigh the company strategy, the deal on the table, and what the people already in the job are feeling, it really comes down to a choice about you. It's a personal thing.
The best way to figure this out isn't to ask which company is better. The real question is, which of two very different profiles, let's call them avatars, best describes who you are and what you want?
So first up, are you the publican? This is your classic host, right? You're charismatic, you want to know every regular's name, you live for running quiz nights and showing the big game. You want a proper pub, a real local, without the massive headache of a complicated kitchen. And you want it to be in a place that just had a bunch of money spent on it to make it look fantastic. If that's you, you're a Punch avatar through and through.
Or are you the general manager? This person is an operator.
You secretly love spreadsheets. You thrive on standards and well-oiled systems. You want the safety net that comes with a big, stable company. You know, the central menu development teams, the rock-solid supply chains. You're not just looking for a lifestyle. You're looking for a career path. If that's hitting home, then you're a Marston's avatar.
So in the end, that's what it all comes down to. The choice between the wolf and the retailer is really about you. Are you a host who thrives on the energy and freedom of a fast-growing empire? Or are you an operator who values the safety and proven systems of an established one? Figure that out, and you'll know exactly which empire is waiting for you.